भी हो गई है। आइए चलते हैं और सुनते हैं ये बड़े एफआई इस समय इंडियन मार्केट्स के बारे में क्या कह रहे हैं।
You would mark Mobius from the same place twice. Last time you were in Dubai, this time also you are in Dubai.
Exactly. Of course, I've been traveling between that. I've been to Turkey, I've been to Cyprus and to Egypt, but I can't go to Singapore. As you know, I have a place in Singapore I want to return to, but it's impossible now because of the COVID situation.
Well, hopefully soon, hopefully soon. Mark, we are in a good spot if you are an Indian investor. We have done rather well this year. The gains have been double digits. But if I look at the world around us, there is a currency crisis in Turkey. Korean markets have plunged to a new record low. Hong Kong, as we speak, is at a fresh 12-month low. So the world is shaky and Indian markets have done rather well for themselves. So do you think this kind of an outperformance what Indian markets have exhibited is real and is here to stay?
Well, it's real. That's no problem about it. And thank God for the Indian market because, as you know, we have a heavy weighting in India and our funds have done very well as a result of India and Taiwan. And so those two countries have done very, very well. And look, you have to realize that a bull market is not over till it's over. In other words, you have to assume that the bull markets will continue unless there's some good reason to believe that they will not continue. And if we talk to the companies in which we invest in India, we see that they continue to do very well in their earnings. They're growing, they're innovating, and we believe that there's no reason for us to panic or get out. Even if the market goes down, we probably would buy more of what we have. So I think we have to assume that things will continue to do well. Of course, there'll be short time corrections, maybe 10, 15% corrections along the way, but these will be minor corrections in an ongoing bull market.
So in this leg of decline in Indian stocks, 10% on the index, 15-20% in individual stocks, are you a buyer?
Yeah, we are continue to look and buy Indian stocks. Of course, in our funds, we have certain restrictions on how much we can buy in any one company or any one country. But we're up there, 20% plus in India. So that's quite a big weighting.
Mark, given that the difference between Indian markets, and I'm using valuations for reference purpose, and I'm looking at 1 year forward, the gap between Indian stock markets and the Chinese stock markets, the valuation difference between, let's say, Korea and India, that's very large. I've been told that this is an historical gap like never seen before. Isn't that tempting enough for a global investor like yours to reduce exposure to India and go to other markets which have underperformed and which in a sense offer better entry points?
Well, there's no question. Yes, China has really come down a lot. And of course, this will continue because the government is continuing its reform program, which will affect a number of companies' industries. Now, we are in China. We are invested in China, but we're not in the large companies that are vulnerable to government regulation. We're in the medium-sized and small-sized companies. And we're finding opportunities in China, but we find that the opportunities in India are actually better. The companies are more responsive. The corporate governance has improved dramatically in India. They're very much aware of what we think is very important, ESG and culture. So all these things combine to make us a little bit more optimistic about our holdings in India rather than China. But we're not ruling China out by no means. We continue to look at China, but we just haven't found the terrific bargains that we can see in India.
Mark, I'm also happy to share with you that our Hindi channel that is also live with this interview. So maybe you want to say hello to all our ET Now Swadesh viewers also.
Hello, everyone. Hi.
Maybe a greeting in Hindi would look better, Mark. Okay. Mark, you said that you like China, but you are still inclined towards India. So what is your sense for 2022? Are we in for another year of good double-digit returns? because 2020 was an aberration. First you fell and then you recovered. So I'm keeping that aside. But 2021 has been a year of absolute good returns from a decent base. Could that continue for 2022 also?
Yes, it could continue. The interesting part of all of this situation with COVID is that, as you know, a few months earlier, the Fed in America was saying, well, look, now it's time for us to tighten up and to increase interest rates and so forth and so on. Now, with the threat of a new variant, they're having second thoughts. Now, when that happens, of course, it means that the party is not over, because we continue to see governments pump money into these economies, and we continue to see them trying their best to maintain a healthy economy with low interest rates. So this kind of situation is actually good for the markets. It's very ironic. On the one hand, you see COVID cases going up, but you also see the stock market going up at the same time. So that's quite a interesting thing that you got to think about. You can't see the COVID situation as necessarily bad for markets, because government policies arising from COVID actually are beneficial to markets.
Are markets secretly pricing in tapering whenever it starts?
Well, that's the question mark. Tapering was uppermost in the minds of people just a few weeks ago. Now it's fading into the background because there's a realization that perhaps the Fed will take cognizance of this new variant of COVID and maybe will not tighten the screws as much as we expect.
So Mark, if the COVID variant spreads, could be in for a severe correction or a minor correction? Because when COVID was discovered, that time markets just went through an excruciating fall. Hell broke loose. Markets were down 40-45% across the board. If the COVID variant spreads, what happens then? How do you think markets would adjust?
Well, as you know, when last year when this COVID situation hit, there was panic. The market came down dramatically, but recovered very, very quickly. This time around, I think people are inured to the bad news. In other words, they've been hearing COVID, big disaster, big problems, blah, blah, blah. And now they're beginning to say, well, wait a minute, last time it wasn't so bad, the market did well, so why should I panic with this situation? And by the way, the news coming out of South Africa is that, yes, the new variant is highly contagious, but is not necessarily fatal. In other words, the deaths so far are very, very minimal. So you may find a situation where people will begin to realize that this new variant is not as serious as some people believe. But nevertheless, people will tend to not react as strongly as they did in the first panic.
Mark, when we spoke last, we spoke about your India exposure and it was limited to 3 stocks. Have you made it 4 or 5?
No, we're sticking with those stocks and we are very happy with them. Of course, we continue to look at what the possibilities are, but so far we're not making any changes.
These are mid-cap stocks. Any reason why you, let's say, opted for a persistent, not a frontline name like TCS or Infosys?
Yes, the whole idea of our fund was to be different from the index. As you know, nowadays, index investment is very common. The exchange-traded funds, ETFs, are the instrument that many investors are using. And of course, those ETFs are based on indexes. So in order for us to offer anything different from what people now have, is to do something where the index is not involved. So we make a point of not investing in companies that are in the index. I think in our portfolio of 30 stocks, maybe 2 are in an index and not the main index. So that's one of the overriding principles that we have in our portfolio. The second thing is that we want to go after medium and small size companies that people have not noticed. In other words, that other people are not into. The idea is to see these companies grow and see gradually other people recognizing the value of the companies. Of course, then the prices will go up.
But Mark, two stocks which you own, one is Polycab and the second one is Apollo. Both of them, in a sense, are commodity consumers at a time when we are seeing a serious re-rating in the entire commodity complex, and companies are struggling with maintaining costs, and which is having impact on their margins. Does it make sense to bet on commodity consumers and not producers?
Not necessarily. If you look at, let's say, looking at the tube manufacturing, yes, they're using steel and steel prices are up, but it's only one part of their overall costing. The other part, of course, is labor and all the other aspects of manufacturing. So the impact on pricing is not that great. The good news, in addition to that, is that with the Apollo quality, excuse me?
Mark, go ahead, please.
Sorry. With the Apollo quality, they're able to get a premium price. So they can raise prices without having too much of an impact on demand. So it really depends on the individual company. You'll find that a lot of these.
All right, तो वो थे निखिल डालमिया, हमारे मैनेजिंग एडिटर, बात कर रहे थे मार्क मोबियस से। मार्क मोबियस को लोग डीन ऑफ इमर्जिंग मार्केट्स भी कहते हैं, और ऑफ कोर्स 35 ईयर प्लस का तजुर्बा है उनका इमर्जिंग मार्केट में इन्वेस्ट करने का, इंडिया जैसे। इनफैक्ट उस समय तो इंडिया फ्रंटियर मार्केट्स में आता था, बहुत ही टाइनी मार्केट। जो आज आप माइक्रो कैप इन्वेस्टिंग की बात कर रहे हैं, तो 30-35 साल से वो इन्वेस्ट करते आए हैं, और उन्होंने बताया कि उन्होंने इंडिया पोर्टफोलियो में कोई बदलाव नहीं किए। इंडिया और ताइवान की वजह से उनका फंड एक्चुअली बहुत अच्छा परफॉर्म कर रहा है। चलिए, बाजार तो डेज लो पे है, और ऐसे में हम वापस से एक और गेस्ट को वेलकम कर रहे हैं 18 और स्वदेश के स्टूडियोज़ में। इनफैक्ट जब से चैनल लॉन्च हुआ, आई थिंक स्टूडियोज़ में